In this video, I'm going to let you know the 3 stocks I'd rather invest in than Palantir. The first stock is Uber. Not that long back, Uber became a profitable company, and since then their free cash flow or their profit has exploded, and every single year it seems to be growing exponentially. And just this year alone, their core business model, which is their bookings, are up over 20% year over year, and they're continuing to grow through their Uber ads and their Uber Eats business. And even after an incredible return the past 6 months, and especially the past year, Uber still seems to trade at a low price to sales ratio. And I think the main reason for this lower valuation is because a lot of people are fearful that companies like Tesla or even Waymo are going to start taking market share away from Uber. But personally, I think these companies will work together, and rather than being competitors, they'll actually help each other out. With potential growth into sectors such as freight transport and also autonomous vehicles, I think Uber still has a lot of potential upside. The second stock is ASML. Now, when I think of monopolies, I either think of ASML, Visa or MasterCard, and that is because they're probably one of the most monopolistic companies in the entire world, which means they hardly have any competitors or any other company who can replicate what they do. And explained in very simple terms, ASML make the machines that people like Nvidia and Apple and TSMC use in order to make chips. So literally the entire AI revolution of chips and data centers and all these different things, ASML is playing a huge part in it, because without the machines, they wouldn't be able to do it. Next year in 2026, the revenue is expected to grow in double-digit growth. And because of the monopoly they have on the industry, this allows them to have a lot of pricing power, which is one of the main key factors of a monopolistic company. And also there is a lot of demand, so they have a backlog of, customers waiting to buy these machines. And they can sell these machines all the way up to around $500 million. And despite all of these things I've just mentioned, I still do believe this company is trading below its fair value. Not a lot of people know about this company, but it's definitely one I'd recommend people looking into more. And finally, last but not least, we have Google. Now, Google is a stock I talk about in nearly all of my videos, and that is simply because I believe it's so undervalued and a very misunderstood stock. So there seems to be a narrative around Google that they're a dying company, but in reality, the fundamentals would say something different, as their cloud revenue is still growing at double-digit growth along with YouTube. And with the amount of money they're investing into AI, such as DeepMind and Gemini, I believe they could be one of the biggest players in AI going forward. And despite the amount of cash flow this company produces and the dominance they have within so many sectors on the market, they're still trading at below a 25 PE ratio, and they're actually trading below the overall market. And as I already said, this company is a money printing machine with over $50 billion in annual free cash flow. And these are just some of the surface reasons why I invest into Google myself. But if you want to learn more about my investment thesis on Google, you can check out my other videos. If you enjoyed this video and want to see more finance videos, make sure to follow my page and double tap the screen.